Hello friends and welcome back again to USA Fans. Today's episode is shaping up to be perhaps the most important and deeply analytical video we have ever produced on this channel. And I do not say that lightly, because if you are currently invested in the Iraqi Dinar or the Vietnamese Dong and your future financial plans depend on these holdings, then I am going to request right now that you dedicate your full attention to this video for the next 20 minutes turn. Off distractions. Because today we are not here to discuss cheap internet rumors or flashy headline hype. Today we are going to dissect a reality that is unfolding right now behind the curtains of the global financial system, specifically focusing on the undeniable connection between the US Treasury in Washington, D.C. and the secret war room-style preparations currently underway inside major Tier 1 banks. You have undoubtedly heard the whispers growing louder over the past few weeks. A specific number range is gaining immense traction in the private banking sector, and that range is $3.90 to over $4. I know that simply hearing those numbers makes some hearts beat faster with hope, while others immediately dismiss it as pure fantasy born of desperation. But in this long-form deep dive discussion today, we are not going to waste time debating if this rate is possible. Instead, we are going to seek the answer to a much more critical and practical question. Why has the United States Treasury suddenly sent specific rate codes to select banking institutions for back-end testing right now at this exact moment in history? Because we must understand that a rate change of this magnitude isn't just a number changing on a television screen or a mobile device. It is a massive global economic tsunami, and surviving a tsunami requires immense infrastructure preparation that cannot happen overnight. In today's video, we will uncover every layer of that preparation based on intelligence gathered from various high-level sources, inside information from the international banking sector, and an analysis of the geopolitical shift in Washington. What becomes clear based on this evidence is this: the US Treasury has effectively removed the political brake pedal that has held this back for decades, and redemption centers and major financial institutions globally are currently in an unprecedented state of high alert, preparing for an event that is beyond the imagination of the average person. Let us go a little deeper and try to understand the true significance of this $3.90 potential rate. Currently, the value is a fraction of a penny, but imagine if an average investor suddenly learns their holding is worth millions. This is a massive challenge for the banking system. And our investigation reveals that these banks are currently preparing, basing their operations on four major pillars of activation that we need to analyze carefully. The first and most critical pillar that we have uncovered is what insiders are calling the rate code injection. This is the smoking gun evidence. In normal day-to-day banking, currency rates fluctuate by tiny fractions of a cent based on market pressures. But right now, we are seeing evidence of what are known as shadow codes being tested in the deep back end of global forex systems. These are not live rates that you can see on the internet yet, but they are digital placeholders that tell the system what to do when the trigger is pulled. Sources suggest that specific alphanumeric codes corresponding to a value base over $3.90 have been uploaded to the testing servers of major institutions like Chase and Wells Fargo for stress testing. We have to ask ourselves, why would the most sophisticated financial institutions in the world waste time and billions of dollars writing complex software code for a rate that they believe did not exist or would never happen? The answer is simple: they wouldn't. They do it only when the US Treasury and the Federal Reserve give a pre-clearance signal indicating that this is a real future scenario. This coding proves that the banking software is being taught right now to recognize the Iraqi dinar not as a sanctioned junk currency, but as a powerhouse global asset on par with major world currencies. This brings us directly to the second pillar of preparation, which is the liquidity protocol. Just imagine for a moment, on the day this new high rate becomes effective, thousands upon thousands of people lining up at banks to exchange their foreign currency for local currency. If the rate is truly in the $3.90 range, banks will need to provide enormous amounts of immediate liquidity against every single transaction. Do they currently have this volume of US dollars sitting in air vaults waiting for you in normal times? They absolutely do not. Therefore, behind the scenes right now, massive coordination is underway between the Federal Reserve, the US Treasury, and the Central Bank of Iraq. The US Treasury has quietly authorized the release of previously frozen assets and is setting up what are known as digital liquidity corridors. This isn't just about printing pallets of paper money. It is a complex process of ensuring that when you digitally exchange your dinar, the electronic dollars are actually available in the system to back that transaction. The fact that the Federal Reserve is now openly praising the Central Bank of Iraq instead of sanctioning them for money laundering is the ultimate proof that this liquidity protocol is active and being readied for deployment. Now we must consider the third pillar, which is perhaps the most overlooked by the average investor, and that is the massive human resources or specialized personnel shift. You might be thinking that banks already have plenty of employees, so why does this matter? But believe me, there is a heaven and earth difference between a standard banking teller handling a small deposit and a certified wealth manager handling a multi-million-dollar currency repatriation event. When thousands of people arrive to collect life-changing amounts of wealth, ordinary bank staff will not be able to handle that pressure or the complex compliance paperwork. According to our detailed intelligence, redemption centers and major bank hubs have quietly changed their staffing schedules for the next 2 weeks. And beyond, they are bringing in specialized private banking experts to specific branches that have been designated as redemption locations. These experts are being subjected to rigorous training, which includes how to quickly and accurately verify large volumes of currency, how to set up immediate trust accounts to protect the new wealth, and crucially, how to conduct professional interactions with clients who are experiencing extreme emotions. This is not just about increasing headcount, it is about creating a specialized financial special forces team to manage the event. The fourth pillar, and perhaps the most sensitive issue that we must discuss, is military-level security when we are talking about potential transactions. Involving millions and collectively billions of dollars, security measures must be escalated far beyond normal banking standards. Redemption centers are no longer just ordinary bank branches. They are being built up and fortified almost like fortresses. Our sources tell us about the installation of advanced biometric access controls that go beyond simple key cards. We are hearing about 24-hour high-definition surveillance upgrades and even special contingency contracts with private security firms or local law enforcement agencies to provide armed presence during the initial exchange wave when people walk out of a bank or complete a transaction that gives them massive amounts of wealth. Ensuring their safety and the safety of the institution is paramount. Therefore, a strict security perimeter is being constructed around this entire process. Right now, as we speak, friends, look at this. Massive undertaking, these logistics, these enormous expenditures, and ask yourself, are the biggest banks in the world doing this for nothing? Are they basing billion-dollar decisions on some rumor from a YouTube video? Absolutely not. We are doing it because the geopolitical landscape has shifted dramatically. The international financial system is currently observing the economic changes in Iraq very closely, but more importantly, they are watching Washington, D.C. for years. The US Treasury was the primary obstacle blocking the revaluation, blocking the funds and demanding compliance. But look at what has happened just in the last few weeks and months. We are seeing high-level meetings where the US ambassador is shaking hands with Prime Minister Sudani, praising the banking reforms. We see the Federal Reserve inviting the CBI governor to Washington, not for interrogation, but for cooperation. The political blockade that held this back for 20 years has effectively been lifted. The United States has realized that a strong, stable Iraqi dinar backed by oil and gold stabilizes the entire Middle East and helps the global economy. This $3.90 range is not magic. It is the calculated mathematical result of Iraq's immense asset base, combined with the newfound American approval that allows those assets to be properly valued on the global stage. Now let us come to the most important part of this entire 20-minute discussion, which is what this means for you, the individual investor, and what you should be doing right now. I know that hearing about secret rate codes and bank preparations makes you excited, and that is only natural. But this excitement, if uncontrolled, can be your biggest enemy. This is the time when scammers and fraudsters become most active because they know you are emotional. They will tell you, I have secret information, or if you pay me an upfront fee, I can get you exchanged early at a special rate. Friends, these are all traps designed to steal your currency.